the question comes up quite a bit about long-term care. Do I need a long-term care policy? And that's a complicated question, but let's try to simplify that just a little bit. We think of it this way. It's one way of insuring your nest egg down the road against being depleted. Now let's put this in perspective. Less than half of us will spend any time in a long-term care facility. Maybe 40 to 45% of us will. For those of us that do end up in a long-term care facility, most of us will be there 2 years or less. All right? So the odds of us ending up in a long-term care facility and being there for years and years and years is small, but yet it can happen. All right, so let's think about this, because long-term care insurance can be quite expensive, but it can also be a way to protect your nest egg. Nursing homes, even in this area of the country, are costing $40,000 a year and higher. So let's put it in financial perspective. Suppose that you've saved all your life and you've accumulated a total nest egg of $50,000. You'd like for your kids to get it, but that's all you've got is $50,000, and you're worried about going into a long-term care facility. Should you buy a long-term care policy? My advice would be probably not. Here's why. The premiums are going to be expensive, and if you end up in a long-term care facility, you're going to use your money up fairly quickly. 1 year in a long-term care facility could exhaust your entire nest egg. The reason I recommend not buying it, as a general rule, is it's going to be costly, and you don't have that much in assets accumulated anyway. So at the lower end of the spectrum, I don't have a lot of wealth. I probably don't need the long-term care facility. What happens when I run out of money? Then I would probably have to go on some kind of state or federal aid to pay for my nursing home care. Let's look at the other end of the spectrum. I've actually accumulated a lot of assets. I have $2 million, $3 million worth of assets. Do I need a long-term care policy? Well, we usually would say no, probably not, because you can generate so much income off of a $2 million or $3 million portfolio that you can afford to self-insure, and if you do need $50,000 a year to pay for your nursing home, you can get it off your portfolio income. Now, there's the person out in the middle. The person out in the middle he's accumulated more than the $50,000 nest egg, but he's nowhere near the $2 million. He's got $400,000, $500,000 in assets, and a 10-year stay in a nursing home would completely deplete his assets if it happened, as unlikely as that is. But on the other hand, he'd like to leave something to his kids. That is a possible candidate for long-term care, because perhaps you have enough assets, you can pay those premiums, and if in the event that it happens, you will have coverage that will protect your $500,000 nest egg. So at the low extremes, we don't necessarily think it's appropriate as a general rule, and at the higher net worth extremes, we probably wouldn't recommend it. But out there in the middle, those people are candidates for long-term care. It's a rather extensive process applying for the policy. You'll have to undergo underwriting and be qualified for the plan, but long-term care may be appropriate for that middle of the range person who wants to leave some assets to their heirs.